Good afternoon. It's Jerry Floyd with the Iowa Finance Authority. We're here today. We're going to cover the home rental project webinar presentation for those applicants. Ahead of time, I want to apologize. We're down about 3 staff members today due to illness and travel issues. So we're going to do the best we can with the webinar. Questions-wise, we are going to ask you to hold your questions until we get through either the PowerPoint presentation. We'll take questions at that point, and then we will also take questions after we finish review of the application that we have available for you to view today. Emily is asking now if anyone's having any trouble hearing. There's a chat feature in your software there that you can see. If you're having issues with that, please note that there, and we'll monitor that as much as we can. Also, the questions tab is where you'll be submitting questions that you can type in. Another piece of housekeeping here is looks like most of you currently are muted. That's a good thing. It helps us keep down on the background noise as we go through the presentation. Again, if you have questions, you'll need to unmute your phone at the times that we'll be taking questions. Otherwise, we do appreciate you keeping those muted. Yes, and we'll have a couple of slides in the presentation that show you the method of submitting your questions via email as well. Those questions can be submitted at any time, either after this webinar or during the round of applications. We'll also cover when we'll be posting answers to those questions for everyone. Did you get any feedback? We're going to start with the PowerPoint today, and then when we're through with the presentation, like I said, we'll cover related questions. We'll then go through the sample application together. We'll show that to you at the view we have here online at the office, and you can follow along with that. On to the presentation. Maybe. Okay, staff members that you'll be interested in knowing about here at IFA, Carol Ann Jensen is our Chief Administrative Officer. She's over all the multifamily housing programs here at IFA. Connie Bryant assists with our program forms, our website, our reporting, and she handles all our interaction with the IDIS accounting system at the federal level. Rita Abel and I are the project managers. We oversee the awards throughout the allocation period. Nancy Peterson, also known as Pete, she will be your contact for submitting and approving your affirmative fair housing marketing plans. Christine Zimmerman also assists with your draw request, contractor clearances, and all of your reporting requirements. So those are some of the staff members here at IFA you'll be needing to know about. Applications for this round of funding are going to open on Tuesday, December the 17th at 8 a.m. Note here is that you will not be able to view the applications prior to this date. It's not until you log in and create your account that you're going to be able to open an application and view that application. The due dates for this application be another Tuesday, January the 14th, 4:30 p.m. We will not accept applications after the cutoff time. I would suggest that you have your application wrapped up probably earlier that day and be able to submit that thing and make sure that we get it before that 4:30 deadline. This round of applications is going to include applications from subrecipients as well for tenant-based rental assistance, home buyer down payment, closing costs, rehab assistance projects as well. The amount of funding we have available in this round is $5.5 million. IFA does reserve the right to limit total awards to this amount of funding, but we may consider awards that are over and above this amount if we have applications that meet threshold and underwriting requirements. Eligible applicants for this round of funding include public, for-profit, and nonprofit entities. There have been some rule changes we're not going to cover in depth today about CHODOs. CHODOs will be applying as nonprofits, also in this application indicating that they desire to be a CHODO set-aside for their project, and we will approve CHODOs on a per-project basis from this point forward. A little overview on home rental. Home rental funds may be used for acquisition, new construction, or rehab of single-family, multifamily housing. IFA's maximum investment of home funds in a project this time will be $1 million. Applicable limits per unit are going to be the 221D3 limits that are in effect at the time, and that will be our per unit limit on home units. That is the 2012 221D3 limits. We will use those in the meantime. I don't think that they're going to be updating those numbers or utilizing that metric from this point forward, but for the time being, it's what we're utilizing. Maximum home investment in a project per unit is further determined by cost allocation. The project percentage of home-assisted units must at least equal the percentage of home funding in the budget. Of home in the project budget. Per unit funding also can be a little complicated if the units are not comparable. An example of that would be if you're requesting home funding and that request is 80% of your total budget, and you have a 10-unit project, then you're going to need 8 units in that project be home-assisted units. So either the cost allocation method, which is this percentage method here, or the 221D3 limits will limit you to, will require a certain number of home units in the project. We discussed non-comparable units a little bit. Those are units that are not within 20 square feet for similar bedroom count units in the project, and they don't have similar amenities. We'll cover that topic a little bit more when we get to the application itself because it details exactly what the requirements are there. The form of home subsidy, the subsidy will be structured as a loan. The loan will be at 0% interest. The loan is considered hard debt. In effect, it must be repaid. You can request up to a 30-year amort on the loan itself. Outside of what the applicable affordability period may be. Let's say your affordability period is only 10 years. You still can request up to 30 years for payments. Your payments will vary based on maintaining the DSCR that's required in the pro forma. Your payments for the home loan we'll take proposed cash flow into consideration. We'll cover how this works when we get into the application, and you'll see how the DSCR varies based on the amount of payment that you're putting in for home. One change in policy this year is that CHODO projects are also going to be required to make payments based on available cash flow. So we'll cover that again when we get into the application itself. A couple more notes on the form of home subsidy. Payments are subject to change based on annual review of financial performance. When you're putting together your application, you're going to see a 20-year pro forma. It's very hard to estimate the performance of that project throughout that time period. We understand that from reviewing past projects, and you will be submitting annual financial documents that let us review the financial condition of the project and see what kind of cash flow is available for payments. Some situations may warrant that your costs have increased for that period of time and you can't afford a payment. We'll look at that. Also, if cash flow is doing really well, we may ask for a little additional piece of that cash flow to help assist us with other projects that we're funding with home. The forgiveness of any portion of the loan is subject to policy in effect at the time of maturity. There's no longer an expectation that the loan balances will be forgiven. Approach your project with the intention of repaying or restructuring the debt at the end of the affordability period or the amortization period, whichever is applicable. Eligible costs in the project. Eligible costs include land and or building acquisition, site preparations or improvement. Be real careful with home funds in a project. Anything off the site is not home eligible. If you have extensions for utilities, roadways, things like that that need to occur with the project off-site, just be aware that those are not home eligible. And when we go into the budget in a few minutes, you'll see that the areas where those off-site improvements are located, actually you're not able to enter home in that section. So we'll cover that in a little while as well. Construction materials and labor, of course, most of the soft costs. Soft costs, that's going to include just about any professional service related to rental project development. IFA does prefer to reimburse for materials and labor. These costs are much easier to document and rarely questioned by HUD reviewers and people such as that. Other eligible costs, land and or building acquisition. A few notes on appraisals here. Market value must be determined by an independent MAI certified appraiser. Appraisal method must conform with generally recognized practices and procedures. This is pretty much any standard appraisal out there would satisfy these requirements. Must be no more than 180 days old on the date that it's submitted to IFA. I don't think that'll be an issue for any of you guys. If you don't submit an appraisal with your application, you must submit one within 30 days following the application due date. That appraisal that you submit with your application or soon thereafter must at a minimum document the as-is value of any acquisition that you're proposing in your project. Prior to the completion of the project, you will have to provide an appraisal with the as-completed value of the land and improvements. Some people choose to forego the cost of that ahead of time. It's not the preferred method, but one we can work with. Some will wait until the project is near completion before they have that as-completed value. We prefer it ahead of time if at all possible. Appraisal costs, as a side note, are eligible project costs should you receive an award. Unit designations, all home units must be either fixed or floating. Fixed obviously means the home units are designated up front and never change. Floating means those units may change over time so long as the total number of home-assisted units in the project remains constant. Floating does require that home and non-home units must be comparable in amenities and square footage. As far as property standards are concerned, all housing acquired, rehab, assisted with home funds must meet applicable state and local codes. All new construction must obtain Energy Star 3 certification as verified by an Energy Star rater. Affordability periods, standard home requirements here are that any project with home funds up to $15,000 or just under $15,000 per unit will require a 5-year affordability period. Those between $15,000 and $40,000 require a 10-year affordability period, and those over $40,000 require a 15-year affordability period. All new construction or acquisition of new housing must have an affordability period of 20 years. If there's a potential of prior home investment in the property, please contact IFA to determine whether the property is eligible for additional home funding. If you should know that ahead of time, but if you have any questions or any ideas that potentially home funds have been used in this project before, we need to make sure that that project is out of its previous affordability period before we introduce additional home funds. Home units must be rented to income-eligible tenants at rent limits established by HUD. Maximum home rents must be reduced if the tenant pays for their own utilities. We'll cover that in your exhibit uploads, and you will be telling us in your application what utilities the tenants will be paying for themselves. Income eligibility, 90% of the total households assisted must have incomes that are below 60% of AMI. Projects with 5 or more home-assisted units, at least 20% of those units must be rented to those that are at or below 50% AMI throughout the affordability period. I may have said that wrong. It's 20% of the home-assisted units. make sure we got that clear. All eligibility must be verified through source documents and recertified annually. I'm going to go on to topic of acquisition and relocation. We're covering that in your application webinar here because acquisition and relocation, in order to properly navigate that process, requires some effort during the application phase. So we're going to cover that briefly here. If you have any questions related to acquisition and relocation, feel free to submit those. We'll help walk you through that process if it's been determined that you have relocation needs in your project. Any project funded with IFA home funds that potentially could displace someone is going to have to follow the URA requirements, and we will help you walk through that. Due to the complexity of URA requirements, IFA does reserve the right, if an applicant does not appear to have the abilities to and the qualifications to navigate URA correctly, we may require that they hire a consultant to do that. It is a veritable minefield of issues that can be done incorrectly, so we want to just make sure that that particular part of the project is being taken care of adequately. One note about that, any eligible tenants or property are eligible for relocation expenses. That could be a commercial tenant, residential tenant, whatever the property is. If it's a property with commercial equipment on it that has to go because of a federally assisted transaction, we may have to assist with moving property from the project. So just be aware of the issues that could come up with acquisition and relocation. One of the notification requirements, a piece that is required to be submitted with your application, is a notice to seller voluntary acquisition notice. The form in its state right now, you could look at it on the website right now, does not fit a rental project very well. It was designed for a home buyer. But prior to the time that our application's open, we will update that form and get it posted on the website to more accurately reflect a rental type project, and that form will be useful to you. Basically what the form is a notification to the seller that they are aware that the buyer did not have the power of eminent domain at the time the contract for sale was entered into, and that the seller is not eligible for any relocation benefits. Just keep in mind there, though, that any tenants that may be on this property would be eligible for relocation benefits if they were displaced. One of the items in that notice is the fair market value estimate. Not only do you have to estimate the fair market value of the property, you have to lay out exactly what you're paying them for the property. The estimate of fair market value was put in there to make sure that someone wasn't taking advantage of the seller. So that item will be in there. It must have been prepared by someone familiar with real estate values. IFA must have an explanation of the basis of that estimate. As far as planning your project for acquisition and relocation, at an early stage in the process, you or your consultant should meet and talk with the occupants of the site to be acquired, rehabbed, or demolished. I know sometimes before the property changes hands, the current seller may be apprehensive about any contact with their tenants. We have to do the best we can in those situations. Call us and we'll discuss that if you're having issues with that particular item. To any extent necessary and feasible, an on-site survey of the occupants should be conducted before initiation of a project. We do have some forms on the website that may be helpful to you. Those forms are designed to help you identify people that may be eligible for relocation. Any existing tenants on in the property, it's best to determine who would be income eligible prior to submitting your application, because that will help you in planning the expenses that may be associated with acquisition and relocation. That pre-qualification also will help you determine if you have occupants who will become displaced, obviously. Home cannot be invested in a project, a unit that is currently occupied by a tenant that is not within the income guidelines. That is a non-compliant unit, and you cannot get home funds for that unit. If after you consider this project it becomes necessary and reasonable to permanently displace an existing over-income tenant household, be aware that the over-income household will then be entitled to full URA benefits. One other way that someone could be displaced from a project that not everybody is aware of. If there are tenants in the project that are currently enjoying a much lower rent than what the project will be charging after completion, and that tenant cannot afford that rent, then that tenant is considered to be displaced as well, permanently displaced, and they would also be eligible for relocation benefits under the URA. We're not going to spend much time on lead-based paint. We're covering it just so because it is one of the items you need to address prior to putting in your application. There's some quite a bit of expense can go along with the project that has to take care of lead-based paint requirements in the project. HUD has issued some interpretive guidance. If you're pull this presentation off the internet, you can go to the links that are there. That interpretive guidance is very good about helping you discern what items need to happen as far as lead-based paint compliance on your project. Various subparts of the regulation depend on the type of activity you're undertaking. Definitely read and become familiar with the subparts of the legislation that are going to apply to your activity. More than one subpart may apply. The most restrictive will be the one you need to comply with. Subpart B, definitions of terms. Subpart R are two of the areas you definitely need to look at. Procedures for reducing or abating lead-based paint hazards specifically applies to pre-78 rental projects. Section 504 in rental projects protects people with disabilities or handicaps from discrimination in programs or activities that receive federal financial assistance. This applies to individuals who have physical or mental impairment that substantially limits one or more major life activities. Accessibility requirements in a rental project. New construction, 5% of the units must be accessible for mobility impaired, 2% accessible for hearing or visually impaired. That would be a minimum of one each on a new construction project. If it involves substantial rehab, 15 or more units, kind of the same requirements apply. In between those two areas, a rehab of less than 15 units, the requirements are not near as onerous as they are in new construction and over 15 units. There are still some requirements, but we can help you get through satisfying those requirements and documenting such. As far as environmental is concerned on a rental project, completion of the environmental review is required before you can draw any funds for your project. The requirements and process for your project will definitely lengthen the time before your project will be able to move forward, and you should not do anything that limits your site prior to receiving HUD release of funds on a project. There's something I wanted to tell you there and I couldn't remember what it is, sorry. So that kind of outlays the requirements that are going along with this round for rental projects. We're at a place now where we can take questions concerning the material we just presented, and we'll be moving to navigate the application shortly. I'm opening up my dashboard here where I can see if any questions have been submitted at this time. Jeremy asked where you can find the 221D3 limits. Those are posted on IPA's website. Let me show you where that's at real quick. Second thought, I will show you that in a few minutes. Let me get this screen out of our way. I can't see it. They can't see yours. Those two 21D3 limits are one of the appendices on our website. We'll get to that in a few minutes when I go to the website to cover those. Real estate broker or MAI for property fair market value. Yes, either one of those two individuals will have adequate knowledge of the market to be able to determine a fair market value for, yes, for your relocation needs. We will require the MAI certified appraisal as an exhibit for your acquisition, however. Site limiting action examples. Some things you can do that don't limit your site, some costs that you can incur that don't limit the site, pre-engineering surveys, any soft costs that have gone into the project so far, things like that. Site limiting would mean that you do something that begins to put that property in your name. If you close on the deal, you cannot take ownership of the property prior to getting environmental clearance from HUD. Anything that you do that could limit your project to that specific site would exclude that project from being able to receive home funds. Gene asked, initial MAI appraisal must be completed before consideration. Yes, that appraisal will need to be submitted no later than 30 days after your application. That's all the questions I see right now. If there's anyone that would like to ask a question on the phone, we can take that as well. Make sure you unmute your line to do that. We have a couple of attendees here in the room with us today. If they have any questions, they're welcome to ask those as well, and I'll relay those to everybody on the line. Yes, Lisa.
When you recertify your family annually, and if they end up going over 60%, like how far over can they go before they're not eligible to live there anymore?
That's a question about unit mix requirements for long-term compliance in a home rental project. At initial occupancy, all your tenants have to be at or below 60%. The only limitations you have are if you have some of those low home units at or below 50%, those are remained at or below 50 throughout the life of that unit. Those that are initially occupied other than that at 60% are high home units and can fluctuate up to 80% of area median income. If you have someone that upon your annual review exceeds 80%, then you've reached a point what's called temporarily out of compliance. You have different things you can do at that point as far as raising their rents, things like that, to incentivize them to leave the property so you can open it to someone that meets the income requirements. You're not allowed to make them leave. You can only make it desirable for them to leave. Once that person vacates that unit, you would then fill it with an income qualified tenant to meet the mixed requirement that you have for that property.
That could be under 80 then at that point.
Yes. I don't see any other questions on the webinar right now. Anybody have anything they'd like to ask? Okay, then we will move on to reviewing the application. If you have any questions after the training, home@iowa.gov, and Connie told me the other day when that email would be live, and I can't remember. Do you know, Carolyn?
The day of the application.
The day of the application opens, that email will be live. We'd like you to submit there whenever you have a question that anyone else might have a question about. Also, we want to make sure we're getting everyone the same answers. So every Friday we will post the questions and answers while the round is open. So we'll move on to navigating the application now. Hopefully most of you, and I'm pretty sure most all of you that are attending, are on our IFA constant contact list. If you are, you should be receiving notifications of everything in regards to the home program here at IFA. I will go to my webinar go. I'm going to go to the IFA home site here real quick for you. The home program can be accessed from several places. I usually go through information for developers. When you go there, you'll see over here on the left low-income housing tax credits, other programs that IFA has. The home program will be listed here. Over here on the right, any notices that we put out will be listed right here. You can see the most recent home program application notice. Also under program year, click here, you'll find 2014. On this page, you'll see a note over here about online applications, a tab there you can go to. You will actually get to where you need to start an application right here. I'll demonstrate that. You will need to log in, username and password. If you have one existing, you should be able to access the system right away and see any previous applications you've submitted through the system. If you're a new user, you'll put that information in there. If I were to try to log in right now, I could see any prior applications I have, but I would not be able to open an application yet for the 2014 round. You'll also see under 2014 here, the appendices are listed over here on the right. This is where you'll find the limits. You asked about the 221D3 limits earlier. Those are Appendix C right here. One of the other items that you'll have particular interest with is Appendix E, which is the underwriting standards for a rental without a tax credit project. The application itself has quite a few built-in checks that when we get to it, you'll see that certain things have to be in order before you're even able to submit your application. So we'll cover that in a few minutes. Back to the application screen, what you're seeing is what you would see after you logged in. I had the ability to see under my login all the applications that I've worked on, plus a couple of the others here in the office that are working on them. The one I created, you can see over here under my name, has an edit tab. So I can edit this application. It has not been submitted yet. The other couple of webinars that are occurring tomorrow, those applications have been submitted, and I can only view those applications. Once you submit your application, that application will be locked. You can always go in and view it, but you will not be able to edit that application. When we go through our review of it initially, and you get your notice of deficiencies, then the application will open back up and allow you to go in and correct those particular deficiencies, and then you'll resubmit your application. Here's the application we're going to review today. You'll see when you open up, you're going to be in the Overview tab here. A couple things general about the screens that you'll be seeing in your application. The Save button up here is very significant. If you were to go into a page, one of these tabs over here, and type in 6 paragraphs of information concerning market conditions, and you fail to click that Save button, you will lose that 6 paragraphs of typing that you just went through. So make sure each time you get ready to leave a page and go to a different tab that you click this Save button up here. The Submit button, I don't know exactly how many times it asks you, are you sure you want to do this when you click it, but I think we've built in a couple of features that you can't just accidentally submit your application. So be aware of that as well. We'll just look at the overview screen here. This screen populates after all the other tabs have been worked on. Before you can submit your application, over here on the left, every single one of these tabs have to have a green check mark. If you try to submit an application and you've got a red X over here, and I'll demonstrate how that occurs here in just a minute, you will not be able to submit that application. You will go to the error log down here at the bottom, and it will tell you why you're not able to submit that application. Back to the overview screen real quick, you'll see the project name, primary address, a little bit of information about scattered sites, chotos, things like that are covered here at the top. It states award information here, but the amount that you're requesting in home funds will be listed right there. Project type, depending on which one you choose, will be demonstrated here as well. Any targeting that you're doing as far as occupancy and targeted populations will be listed. The funding sources that you're proposing will be listed here as well, and any additional match not listed in funding sources, any Habitat comes to mind on their top projects where you have a lot of donated materials and labor, donated sites, things like that will go in as additional match. Grand total of your project costs will be inclusive of not only your funding sources but the additional match. The application I worked on here does not have any additional match, so you'll see your grand total is the same as the funding sources. The ownership entity information is listed here. Be aware that you will have to have a DUNS number when you apply for home funds for the ownership entity. That's not a complicated process to go through. You can get that online rather quickly, but you need a DUNS number before you'll be able to submit this application. After you finish the building tab, you'll see a summary of all that information right here. And then down below that summary of information, you'll see some of the items that are required in the project. Initial occupancy shows 100% of home units at 60% AMI or below. Yes, that was correct. Initial occupancy, AMI shows 20% of the home units at 50%. Yes. If you were to have a project that had less than 5 units, that statement would not be there because it does not apply. Long-term occupancy shows 20% of units at 50%. I think everyone knows that once a low home unit, always a low home unit, always subject to 50% AMI requirements. Has the number of required home units been met? Yes, and it will tell you when it's not. Minimum required home units is 9. The requested amount, just under $1 million. Maximum home investment is $947,000. Why the difference in those two numbers? Why wouldn't you request all the home you possibly could? Well, you know, home is here for to fill the gaps. So apparently there was some funding here available to the project that home didn't have to cover, fortunately, and we get to give that to another project. Next section here is the underwriting requirements. You'll see what your expense and inflation rates are. Minimum difference of 1% there requirement is met. Vacancy rates must be 8 to 10% for 12 or more units, 8 to 15% for 1 to 11 total units. The DSCR range is demonstrated here, showing what happens over the affordability period. Operating expenses per unit is one item that we have a minimum requirement on. This is well over that requirement. Rent-up reserve and a construction contingency, at least 5%, but no more than 10% of total hard cost. Developer fee cannot exceed 10%. You'll see that that's down here at 5.9%. So that's kind of the overview page. The general information screen, and when you push one of these buttons, there is a standard pause. It takes a minute to get to some of these screens. I'll try. Oh, that's true. The general information screen is general requirements of the home program and IFA requirements that are on top of that. And you'll see that that's just general information for your review. Project name and description. It's moving rather quickly today. We might be fortunate. You'll see your project name, the type of project that it is. See the different eligible projects there. Occupancy, family, or senior assisted. Targeted populations, you can see all those here as well. On this screen, you'll see most of you will be filling this out probably first thing when you're putting together your application. You may have some idea in your head of how many home units are going to be required. If you get this number incorrect, there are a couple of checks within the application that will tell you that number is not right. You need to increase it. So you can see the project proposed here is 14 units, total of 9 home units in the project. They will be floating units. It is not located in a Great Place community. And you'll see several questions here related to accessory buildings, commercial facilities, things like that. These are all directed towards ineligible uses of home funds. Energy Star certification, this is not a new construction project, so this is not required to meet it. And this question 19 right here is back to what we were talking about, similar units. They have to meet these requirements before you can determine that they have similar amenities. So in order to have a floating home units in a project, you have to have similar units. Back up to the site description. First question is this a scattered site project, yes or no? This is a single location project, so in this case it's no. You would add a new site right here if you did have more sites that you needed to add, several sites in your project. Questions that you're asked as far as a single site are concerned. We'll want to know the location, best identifier we have for the parcel, acreage, number of parcels. Questions about utilities, demolition. We're getting towards acquisition relocation requirements here. And then most of these questions down here are related to environmental conditions that may be present at the site. Site control, you'll name the entity that has site control for the project. Does the current owner of the property have fee simple ownership? Yes or no question here. On zoning, what we need to know is what the present zoning of the property is. Is it zoned appropriately for your proposed project? If not, we definitely need a timeline on permits, variances, schedule for obtaining those, and things like that. Under the Ownership Entity tab, we're going to collect information about the ownership entity right here. You'll tell what type of entity it is. Here's where you'll get the DUNS number. Here's the link to go request one if you do not have one. Tax ID number, and whether or not it's a pre-certified CHOTO. Those CHOTOs we work with know who they are. Although they can't be certified ahead of time, we can pre-certify them that they meet most of the requirements. This application is the completion of that review to make sure that they qualify for CHOTO set-aside. You'll see down here that the ownership entity components will need to know what makes up the ownership entity. This is a simple corporation, 100% ownership in this case. And the contact person for that entity. Next tab in the application is the project team. I just entered one here. Normally you'll see 8 or 9 people in this tab, but I just entered the one. You can see that I entered the developer, and you'll see the questions that are related to the developer, what type of entity they are, their legal name, years of experience, DUNS number, tax ID. So that information is collected here. That would also be true for, let's say I wanted to add another project team member. Here's the list of team members that we have pre-built. There always is a catch-all if there's someone you want to enter in your project that doesn't really have a designation here. Next tab is capacity. This has become a big area of emphasis. Yeah, good answer for HUD, and they have really ramped up the efforts towards IFA guaranteeing that, not guaranteeing, but assessing that these projects have adequate capacity before we award funds. So in this screen, you're going to find, we're going to find sections for the developer. We're going to know exactly what kind of experience that developer has had with different types of projects. So you will list yes or no, and then the name of the project and the city where it's located if you have prior experience. We ask that, of course, for the developer, the ownership entity, general partner, management company, Ask you about any other IFA programs, receiving financing in the past 5 years. And then several questions about prior history of different team members in the project to let us know what their history has been with working with federal funds. Next part is the staffing experience for the proposed project. I'm not going to take the time to go through all the instructions here. It's kind of self-explanatory, but you will go through and enter persons for each of these areas that are required. You'll see marketing, property management, and contract management are the major areas of emphasis. So you will go through, for instance, under marketing here, Paramount Development. Basically some very basic questions here. Years of related experience and the person that has that experience. Yes, and it'll ask what type of role they're filling. Project timetable is a rather simple tab, shouldn't take you long to complete it. Now we're experiencing one of those delays. We're looking for acquisition when you anticipate environmental review would be completed. Oh, the note I did want to tell you earlier, the one I forgot about. When you have a contract to purchase a property, make sure that you take into account the timeline that we're looking at. These applications will not be awarded funds until April. So your contract to purchase has to go past the date that you have clearance on environmental review. So if we're in the April making awards, sometimes your environmental review is 3 to 4 months. So you may be needing to look at the summer that your contract to purchase has an effective date through that period of time. The Buildings tab is one that one of the few that is multi-layered. Anyone who's put in a tax credit app is familiar with this type of screen. But the way it's laid out, you'll see here at the top are all the different buildings that are in the project. Like I said, this is a single site, but I have 5 different buildings on this site. The top 2 here are quadplexes, and the 3 down here are duplexes. So you'll see that all these are broken down into a long-term compliance summary here, and that the home units are floating. When you get to the details of each building, you will add a building. Now I can go back and edit that building that I added. One little trick here is that you can click on Maximize up here. It makes it a little easier to work on this tab. The information we're required, this 4-digit extension of your zip code is a requirement. The reference is right above it here. That helps us fill in the congressional district, Senate district, things like that that come along that need to be filled in that you may not know right offhand. Has the building received home funds? It's one of the questions you need to answer there. Building will be acquired. A little information about the cost, the rehab cost, the date it was constructed, type of control that there is. What utilities will be included in the rents? That's where we ask that question. And any of these items that the building may include, we need to know about right here. Square footage. I know I'm not expecting you to go out and measure these buildings per se, but there should be some record of an existing building, and certainly in your new construction you'll kind of know the parameters there. So fill in that information as best you can. That is mostly one of the critical elements here is if we have units that are not similar, then we have to make calculations on home assistance based on the percentage of square footage of home in the project. So get as close as you can on the square footage, both of the residential and the common areas. This particular project doesn't have common or commercial areas. So down at the bottom of that screen, you have a building. Like I said, this is a quadplex, so there's 4 different units in my building. You can see right now that all 4 of these units are home-assisted units. This one required 9 home-assisted units, so both my quadplexes are home, and then one of the duplex units is home. You can see the information about, here are my 2 low home units that are required in the project, and you'll see their rents are a little bit lower than the high home units. This is where you get down to the second layer, past the buildings into the unit itself. You'll see that the top of unit here is either home or market rate, number of bedrooms, baths, square footage, initial occupancy, long-term occupancy, handicap accessibility, visual or hearing accessibility. So all those items are detailed here. Based on your answers up here about the occupancy percentage, that will answer this question here for you. And the home unit cost is entered here as well. I know when we first got into the overview tab, you saw that I had all green check marks in my application. I haven't submitted it yet, but I'm going to demonstrate to you how the check mark system works and how the X's come into play. Let's say, for instance, I had selected this as a market rate unit. I'd close out of that unit. You see here that it says market rate now. Close this building. Now go back to this screen. You see my buildings tab still has a green check mark. The reason that is because I haven't saved this page yet. Once I click on save, you're going to see a red X show up on my buildings tab. Sometimes it's frustrating. There's a lot of information in this buildings tab. You see the X, you don't know what's going on. Go right down here to your handy error log. And you'll see it telling me that in the buildings section, home units must match number 7, total project home units from the project name and description tab. You must resolve the error listed above before you can submit this application. So remember, back on the project name and description, I indicated that I had 9 home units. This project now has 8 home units, and it's not meeting the requirements. Back to the buildings tab. Let's fix that real quick. Go back to this unit, turn it back into a home unit, 50% initial occupancy, 50% long-term. And I think the cost was a little over $100,000 on this unit. So saving that unit, saving that building, back to the main screen, save here. You'll see that my error with the building is now cleared up. Onto the funding sources and match screen. One note you see right here is that your funding sources must equal uses. This includes any funds utilized to pay project cost. In other words, this number right here must match your budget number. Any additional match that was not listed in funding sources, any of those non-cash match assets that you're contributing to the project would be added right here. That, again, would be donated land, materials, things such as that aren't cash that go into your funding sources. So you'll see under your funding sources, for instance, your home. We'll edit that funding source real quick. It will ask you the source of funds. It will ask you the type of funds. You can see here that there's quite a list of different types of funds, other being one. If it doesn't fit one of our predetermined areas, the source of those funds, is it being used for home match, and the amount that you're requesting. Rate, it's going to be 0% interest. The term is 15 years on this note. One key element here is that I have a 15-year amortization period. Whenever you're filling out the application, when we get down to the cash flow page, before you're able to submit the application, you'll see that the DSCR has to be within a certain range. If you were to put your final home payment in on year 15, you would not be able to meet that DSCR range, and you would not be able to submit the app. So for that reason, I took this home loan and made it a 16-year amort period, and here's my debt service on the project based on the years. So you'll see that it was steadily increasing, helping my DSCR stay in range. Once I got to year 8, there seemed to be significant enough cash flow to kind of level out the payments. Year 14, year 15, and then year 16 shows the balloon payment, which is the unpaid balance of the 0% loan. Perm loans look similar to that. You'll see that steady payment history is put in here for the debt service on that loan, 15-year note. So that's your funding sources tab. And again, that has to coincide with your budget tab. A little bit of information here about your budget. You'll see there's two columns, development costs not funded by IFA Home and costs funded by the IFA State Home Loan. You can put costs in any one of these areas, but this gives us some idea of where you're headed as far as what you'd like to use home for. We can see in this particular case, $456,000 is what you're requesting for acquisition. Back to our point about we like hard cost in the project reimbursed with home. Acquisition is an allowable expense. It's real hard for us to dump the majority of our home funds into a project right away, though, whenever no work has been accomplished on the project. So back to the fact that we'd like to reimburse for materials. We can reimburse for acquisition, but it's not the preferred method for the majority of the funds. Once you go through the budget here, you will see, for instance, we were talking about items that didn't qualify for home. You'll see here that underneath not funded by home is the area where you can enter costs for off-site work, but you're not able to do that over here in the home column. You'll see that in several areas. Parking that's not included in the rent. You'll see accessory buildings are not an eligible expense. Construction interest is not eligible. Taxes during construction. So those items that don't have a blank there, there's a reason for that. It's not home eligible. So once you go through your entire budget, soft costs included, you'll see furnishings and equipment, one of those things that's not home eligible. Get through your developer fee area and project reserves. Again, there's checks in here that make sure you met our underwriting requirements on those. And you'll see that the total project cost on the budget page, $1,608,788. The grand total project cost, $1,608,788. And that does match my funding sources. We'll move on to projected operating cost. This is where you'll be entering your first year cost. We have multipliers in here that project those numbers out over time so we can put together the pro forma, but this is where you'll enter your initial data and what your expectations of these costs are. You're not going to find that there's any real limits on any one of these costs. When we review these projects, it's too hard to put limitations on these items, but we do review them and make sure that they're reasonable and meet our expectations for similar type projects. You'll see here that you'll enter your net real estate and personal property taxes for year one. It's real hard to project property taxes because we have so many abatements and things like that. So you'll see down here at the bottom when we get to it, there's an area where you can manually enter your real estate taxes. This is one of our underwriting criteria is operating expense per unit. Remember that was back on the overview page. This is the computation of that. Just one of the items that our underwriters are checking when they review these projects. This particular project, I just anticipated it having typical real estate taxes throughout the term of affordability and just projected those out over time. Once you have those operating costs in, then the application itself is able to calculate your projected cash flow. You'll see here under the heading of year one, your income expense inflation rates and your vacancy rates are registered right here. Your gross rental income from the unit mix total monthly rent will be computed right here. Any additional revenue sources your project is generating would be entered here. That will change your pro forma, but we haven't asked for those anywhere else yet. So this is where you would enter any additional revenue streams for your project. So total income potential minus your vacancy allowance gives you a net, operating expenses, debt service, net cash flow. So all those things are computed right here. The DSCR, minimum of 1.2, this is your first year. Remember, we're under the first year tab. That gets you down to your 20-year cash flow. If you've got a project that's only requiring 15-year affordability period, that's the period of time that we're monitoring that you meet the requirements. We're not going to make sure that any period of time past that is in compliance. So you'll see here that the DSCR on this project starts out almost 1.3, stays within that range pretty much for the life of the affordability period. After year 15, let's see, here's where that balloon payment came in. So you're at a point where you need to refinance or come back to IFO with some form of proposal on what you would like to do with the funds remaining in that project, considering IFO is still managing the project in 15 years. So that's how your projected cash flow works. Don't think I'm going to take the time to demonstrate. If I had gone back to one of my funding sources and changed, let's say year 14, my home payment to 0, then in year 14, you're going to see my debt service coverage ratio here would get above the 1.5. Once I save that page, I would have a red X up here on my projected cash flow page, and would have to go in and correct that error. So you will not be able to get a green check mark or submit your application unless these are at or above 1.2 and at or below 1.5. You see a note here that if the DSCR exceeds our 1.5, we have some situations where that occurs. We can override the application if we have to, but we don't expect we'll be doing that for anyone in this round. The next tab is your Exhibits tab. The Exhibits tab will indicate every exhibit that will be required for you to upload. All the tab knows is that you uploaded something. The tab doesn't know that you uploaded the right thing. So you may get a green check mark here, although you may not have presented the information we need. That will be determined at the review phase, and we will give you a notice if whatever exhibits you submitted did not meet the requirement. But again, you'll need a green check mark here, which means you must upload. You'll see down here at the bottom is where I had uploaded all of my exhibits already. So I met the requirement and uploaded something for every one of the fields. If I clicked on that, you'd see a blank piece of paper. So I met the requirement, although I may not have met the needs of the project and the requirements of IFA for all these tabs. Exhibits. Most of these are forms. You'll go down through here, standard forms that we require, W-9. Minority impact statement is a state form that you have to fill out. Lobbying certificates. These are letters that you'll need to generate on your own, things that you get from the government, such as your nonprofit status letters. Color photos is new for home projects. We haven't required that in the past. Feel free to upload as many photos really as you want. That helps us really a lot in reviewing these projects, but you see the minimum requirements here. 2 photos looking toward the building or site. That could really be from any direction. 2 photos looking away from the building or site. It's best if you can to stand in the middle of the site and take pictures outward. If acquisition rehab or rehab, make sure that you give us some interior photos as well. Any letters of intent from your lending institutions, commitment letters from other sources. Utility allowance documentation, you'll see the requirements of that utility allowance here. One thing you want to be aware of, H14, I'll go ahead and click on this because it's one of those items that you want to know about ahead of time. Market information for a proposed rental without tax credit. You'll see it's quite a long form, asks for a lot of information. This is outside of capacity. The other major area that HUD is requiring a lot of emphasis on is making sure that the market areas we're putting these projects in are able to support a project like you're proposing. So that is one big exhibit that you'll need to be aware of. Entity documentation. H17 is where you upload your either proof of ownership or your sales contract to purchase. Map of site locations, pretty self-explanatory there. Site plan, this is one of the items that John Kirsch will be reviewing, our construction analyst. Make sure you meet these things exactly as they're listed here, otherwise you will be doing so after the review time if you want to be considered. Plans and specs, kind of self-explanatory here, exactly what we're looking for. Scope of work, if it's rehab or acquisition rehab. Be as generous there as you can with information about what you intend on doing with the property. That helps us understand your application a little better. H23 is a seller's acknowledgement form we'll be updating. You'll submit that here. Relocation plan if required. Great places if you're stating that you're in one of those areas. Some financial information about the applicant will be uploaded as well. You see here 3 years of balance sheets, profit and loss statements. We're having to, along with the capacity requirements that HUD now has, we have to assess the financial capacity of the organization that's applying for the funds. Any tax abatement documents that you have for the proposed project, you'll upload those here as well. So you'll see here, if you've not done this before, it's pretty easy to upload a document. You'll tell it exactly which document you're uploading. You'll give it a title. You'll go find your document and upload it. So it's a pretty simple process. We get lots of people that do submit Word documents, Excel documents. It's easier to look at PDFs on our end, so if you can do that, that would be appreciated. So that gets you through the Exhibits tab. The Requirements tab just basically is more information about what is tied to the use of home funds in this project. The only thing different about this page is down at the bottom you have to agree to those items. Click that checkbox down there at the very bottom and that tab will turn green. One check of the error log here would tell me that hopefully I don't have any issues. So you see none there right now. I actually only spent about 2.5 to 3 hours putting together this application. Didn't take long. Of course, that doesn't include any of the exhibits, any of the filling out the capacity forms in depth or market documentation, things like that. So it will take you quite a bit of time to get through this application. It's getting fairly more involved than what home applications used to be. So don't anticipate being able to put this thing together in just a couple of days. I would spend some time with it. Did want to try to submit the application online along with you guys just to show you how that process works. However, before I do that, I'm going to go back here real quick and see exactly how many questions we have online. I sure wish I could make this bigger. That's it. One question is, if you have two proposed buildings in the same town that you want to acquire, should they be in two different applications? I'll answer that question real quick. Depending on what you're proposing. If you want to do a multi-site project and it makes sense for you to combine those into one project, then you can do that. If you want to submit two different projects, it'd be a scattered site project. If you want to submit two different projects, each kind of standalone on their merits, you can do that as well. So there's really not a limitation there. Economies of scale usually comes into play when you're and you're looking at spreading soft costs across two buildings that are in somewhat confined area. So that may be the way you approach it. Will the recording of the session be available for review by other workers? Yes, we anticipate, if we did this correctly, that we will have recorded this, and it will be available on our website soon. I don't see any other questions. If anyone has a question that they did not type into the webinar and would like to ask that, please unmute your phone right now and ask that question. Anyone in the room with any questions, I'd be happy to answer those. Just giving people time to check in if they would like. Okay, I see a question here from Jeremy. What's the maximum home award limits? A project is limited to $1 million, and we do not have a developer limit. In other words, a developer could propose more than one project.
Well, we don't have one yet.
Yeah.
If it becomes a problem, we may have to institute one later.
How can I find the requirements for visual handicap accessibility? Judy, I don't absolutely know the answer to that question myself. I know that if you look into some of the documentation under Section 504 requirements online, you should be able to come close to finding that. If you don't, please let me know, and I'll put you in touch with John Curtis, and he'll be able to answer that question for you. On the market study exhibit, are we required to use any particular source for demographic or market data? Sam, that can come from many areas. HUD.gov, where they have census data, is a great place to find it. Our State of Iowa Housing Study is another good area that's specific to our state that might be beneficial to you.
A verified third party.
Yeah, a verified third party. If we run across some answers that don't look right, we may ask you where they came from, but try to reference government sources anytime that you can. For the ownership entity, if the developer isn't the owner, do you need the DUNS number for the owner? What if they don't have one? That answer is yes. Basically, HUD's reasoning behind this is they want to track the family tree and see where all their money's going. So some information I was reading the other day basically indicated, yes, the ownership entity, the developer, both of those would need to fill that information in and get a DUNS number.
But we still want a contract with the owner.
Yes. We will be contracting with the ownership entity.
So that we won't just be doing a contract with the developer. Whoever's developing has to own the project. That makes sense. Answering questions.
Emily, do you know how to expand the screen out here? Okay. I'm sure we answered that one. Oh, don't?
No.
Happens if the renter goes over income at some point. Back to Lisa's question earlier, generally they're considered temporarily out of compliance.
I mean, we will be monitoring you through the affordability period. So every year we'll require you to send in documentation of the tenants. We'll also do a physical inspection. So we'll be watching to make sure you don't go over income, but there are allowances if you do go over income. After the first year, there's more allowances than the first year.
Yeah, so first part of your question about fixed number of units, same thing. It sounds scary that when you have someone go over income, it's going to be a big issue for you, and it is. Like I said, it is temporarily out of compliance, so you'll do your best to replace that over income tenant with someone. But like we said earlier, you're not going to kick them off the project just because they're over income. You're just going to incentivize them to leave the project on their own financially, usually.
And that's one reason we also we encourage floating units if possible, because if you have one person who becomes over income, you can switch that unit from home to market rate. Then you could find a different tenant that is home eligible. Gives you a little more flexibility.
I think at this point I've answered all the ones that are up here. Last chance, 30 seconds. Any questions from those in the room? Switching would be allowed with floating units. That's correct, Gene. If you have comparable units in the project, you've got 5 home units, 10 regular, or 5 other market rate units, you can move your home tenants around to different units within the project just as long as you maintain the correct mix.
As long as they're comparable, and when we mean comparable, we mean very comparable. Within 20 square feet.
20 square feet and the
all
exact
the same
amenities.
Yeah, all the same amenities. You can't move them to the basement.
So if they're all the same, can you make that one unit just switch over to the regular one and make a different one? Okay.
If they're all the same.
And one other thing, when you're putting it together, you're not going to be limited in your application really based on which units you propose for home as far as bedrooms are concerned. We didn't really build that in, but when we review the applications, don't propose a project with 5 one-bedroom home units and 6 3-bedroom market rate units. Just be reasonable as far as what units you're proposing. Okay, I've done about all I know to do with this. I think we're going to close the webinar out now. Let's make sure we capture the recording of it. And again, any questions you have, feel free to email until that home email address is active. You can send those to myself or Rita or Carol Ann, and we'll try to answer any questions you have. Thank you for your time today.